Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 16th, 2025, and we're diving into ManpowerGroup's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss ManpowerGroup's latest financial performance.
Let's start with a brief introduction to ManpowerGroup. They're a leading global workforce solutions company, known for their brands like Manpower, Experis, and Talent Solutions. They just released their Q3 2025 earnings report. John, what are we looking at today?
We're looking at a company that has managed to navigate some challenging market conditions, including currency fluctuations and restructuring costs, to deliver a solid performance this quarter.
Revenue and profitability overview. Let's start with the top line. ManpowerGroup reported a revenue of $4.6 billion for the third quarter, which is a 2% increase from the prior year. John, can you shed some light on this?
Absolutely. The revenue growth is a positive sign, especially after 11 consecutive quarters of declines. This growth is attributed to stabilization in North America and Europe, and strong demand in Latin America and Asia Pacific. However, it's important to note that on a constant currency basis, revenues actually decreased by 2%.
And what about profitability?
The adjusted earnings per share came in at 83 cents, slightly above the analyst forecast of 82 cents. The gross profit margin was 16.6%, reflecting lower permanent recruitment activity and a shift in business mix. Additionally, SG&A expenses declined year over year, thanks to restructuring efforts.
Strategic initiatives and market dynamics. John, let's talk about the strategic initiatives and market dynamics that ManpowerGroup is focusing on.
ManpowerGroup is concentrating on two main outcomes: increasing market share and accelerating cost-cutting initiatives. The stabilization in North America and Europe, despite tariff uncertainties, has been crucial. They're also seeing strong demand in Latin America and Asia Pacific, which is encouraging.
How have restructuring costs and currency impacts played into their results?
Restructuring costs and Argentina hyperinflationary currency translation losses reduced EPS by 45 cents. On the currency front, the US dollar's strength negatively impacted revenue with a 2% decrease on a constant currency basis.
Future outlook and leadership statements. Looking ahead, what can we expect from ManpowerGroup in the coming quarters?
The company has provided EPS guidance for Q4 between 78 and 88, which includes a favorable currency impact of 8 cents. CEO Jonas Prising expressed confidence in delivering long-term value by focusing on market share and cost efficiency.
It sounds like they're optimistic about the future.
Indeed, they are. The leadership is committed to driving efficiencies and capturing market opportunities, which should bode well for their future performance.
Key takeaways. In summary, ManpowerGroup has delivered a solid performance in Q3 2025 with a revenue of $4.6 billion and an adjusted EPS of 83 cents, surpassing analyst expectations. John, any final thoughts?
ManpowerGroup is on a positive trajectory, focusing on market share and cost efficiencies. Despite some challenges, their strategic initiatives are setting them up for long-term success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ManpowerGroup's performance in the comments below. Until next time.